All right, taking a look at the percentage of sales method. Universal Inc. estimates that uncollectible accounts are based on total credit sales in year 2. They're going to estimate that 3% of their revenues are not going to be collected. Universal Inc. generates $500,000 in revenue in year 2. At the beginning of the year, they have an allowance for uncollectible account balance of $10,000. So what is going to be their current year bad debt expense? So the first thing we need to note when we are going through the percentage of sales method is that the amount that we're going to be calculating that percentage of revenue is in fact going to be the amount that we are going to take as our bad debt expense. So if we could remember for our accounts receivable method, the amount that we're going to be calculating is going to be calculating our ending balance for allowance for uncollectible accounts. So we're going to have to back into the credits or the bad debt expense for that type of method. So for the percentage of sales method, it's a little bit more simple. We just take our beginning balance of $10,000 and we take that percentage of revenue. So we know that it is 3% times the $500,000 in revenue, and that's going to give us a bad debt expense for the current year of $15,000. Ending balance $25,000. Doesn't matter because our bad debt expense is going to be what's debited here. Which is going to be $15,000. And our credit is going to be that allowance for uncollectibles. I'm just going to write allowance. That's going to be the other $15K. So again, our $15,000 bad debt expense is just going to be calculated by our percentage of revenue.